going to get things set up and then we'll get going. Thanks for joining on this lovely Saturday night. Gonna be posting on Twitter just to let people know what's up. All right, posting now, and then we're gonna get started. All right, bet. Welcome to late night crypto analysis with the cryptologists. Thank you for tuning in. As always, if you like what you see, please subscribe, like the video so you can see what I got in the future. YouTube has algorithms to make sure that I pop up first on your feed if you like what you see. So make sure and follow me if you want to keep seeing more of these videos. But basically, guys, these live videos that I do, free flowing, freestyling, off the dome, giving you the crypto cipher, just showing you what I see on the weekly, the daily, the 4 hour, the 1 hour. Just want to break it down for you guys. So I train your brain to see the big picture, and if you're trading in the low time frames, it gets you in a good habit of starting big and then zooming in. Because always, guys, when you start looking into a trade, look at the high time frame first, because that will inform the bias of the trend. Is it going up or is it trending down? And then that will inform the short term trades in which way you should be looking to trade in the short term. On the 1 hour, the 4 hour, the 15 minute, the 1 minute, the 1 second, if you're just a degen, getting in on the 1 second chart. That's not for me. To each his own. If you a player in the 1 second chart, then good for you, bro. But for me, I pretty much stick to the 1 hour is as low as I go nowadays. I used to trade on the 15 minute, but man, the chop is real on those low time frames. And as far as my heartburn and stress level goes, I think I find it more stress-free when trading on the 1 hour and 4 hour lead. So I'm just going to go, with those time frames on low time frames. And then for me, I will look for bigger swings on the daily, 4 hour, 8 hour is where I look. And then the weekly really is where I zoom out to see if there's a overarching bear or bull bias that I should be paying attention to. So with all that said, thank you for tuning in, and let's jump in. So the first thing you will see is the weekly chart that I have pulled up. And I've posted about this on Twitter. So if you follow me on Twitter, you've seen me post about this already. But just wanted to highlight it again for those that haven't seen it and are jumping on here. All the millions of people follow me Saturday night. So, I just want to do my due diligence to make sure I give you this look if you haven't already seen it, millions of people. So there's an upward channel that I'm tracking here. There's been 2 touches both ways. Boom, 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 boom. Oh, call it 3 on the bottom. And so to me, this is valid to at least pay attention to. Will it hold if we get back down here? I mean, probably not. I'd put more weight on, daily time frame, zooming in, and we'll get to that point. But definitely at least good to pay attention to, because for right now, there's hope that at the very least, if it's not this channel, you can just see that there is a higher low set right over here, and would like to hold that. And that's this green line that I've put down here. It's 37,700 that I'd like to see this week at least hold above. Of course, you see here and here, there's been significant volatility in the last 2 weeks, up and down. But the close of both of these last 2 weeks are very close together. So, and that just goes to show you the volatility in the market right now with Russia and, the U.S. inflation and jobs. And there's just so much turmoil and unrest going on in the world. Not to mention we've been in this COVID twilight zone for the last two plus years. So there's just so much unrest and so much uncertainty. There's constantly media swinging fear into the market left and right. One week you're seeing that there's peace talks. The next week you see that oil prices have surged and energy and commodities have surged, and they're in control. Just know that, guys. So at the end of the day, look at the price action first. Pay less attention to the media, because their job is to influence you to make a snap decision, and the people on the top know what's up and are connected to the media. If you don't know, now you know. Believe it. And so they're the ones pocketing on all of these impulse moves by retail FOMO or fearful sellers. And so that's why it's good to know the chart, know what you're looking at, and know where the invalidation levels are. So weekly time frame holding up, still can argue that we are an upward trending market. But now zooming into the daily, and last point was this red line here. You can see all the way over here from February 22nd, there's a horizontal that has offered support here and support here, and then once we broke below it for the first time on a weekly close, we retested and rejected immediately in the next 2 weeks. And we just now, over these last few weeks, retested it again. We've had overall, over the last couple of months, 1, 2, almost there, but 3, 4, and 5 wicks above this horizontal plane and have had no luck getting above it. So this is a very significant level to me that I'm watching on a high time frame, 43,000. Write it down, make note of it, because again, this is definitely one of those that if there is a weekly close above this level, it's significant, and that is a time where you can really get the hopium up and get more excited, because this would be the first break in over 2 months of this level on a weekly close. So now zooming into the daily time frame, you can see I got the Fibonacci up here for you, a little fib extension, so you can see that we've had from the swing high here, and I didn't pull it up from the top here because there was a bounce here, and I would have pulled it from here to here and then played the fib from this level. And then once it broke below, this is where I've started the new Fibonacci from the top here on this new move down off of this bounce here to the swing low here, the bottom of the move. And you can see that there has been on the daily time frame 1, 2, 3, 4. Again, it coincides with the weekly horizontal line that I just talked to you about. It's about 43,000. So we come back over here, and you can see the 43,000 mark is closer to the 0.5 on this daily time frame. But there's been a lot of chop in between here and the golden pocket on the daily. So really, we're looking at, on a daily time frame, if you're trading the daily, a close above 44. You could call it a close above 44.5 would be the first sign of significant life, right? My ears are perked up. But really, for me, above this golden pocket, it perfectly lines up with this other horizontal plane. There was multiple touch points over here when we were stair-stepping down from the top. And it lines up at the very top of this golden pocket at 45, pretty much, let's call it 45.5. So close above 45.5, all bets are off. Let's go up. I know a lot of people are saying 46K, but I would probably get in at 45.5 with confidence and with a stop below 44.5 or 44, just to give me a little bit more breathing room on a larger spot position. This is not, for me, this is not leveraged, but for these larger swing moves on the daily and weekly, I look for these very clear defined horizontal planes to be broken, either up or down for short or long. And then I will also look for diagonals to complement what I'm looking at. So you can see there was already a break here, and you could have traded that break, but it really didn't close above this significant level as marked here from the Fibonacci and this horizontal plane over here. So you could have held off and you would have been fine. You could have played the break here and then sold up at this horizontal plane, which I caught it right up here on this close and just played it up here and then got out real quick. So there's a bunch of different ways you can trade, but my favorite setups are the ones where there's a significant long downtrending line that's broken and you get confluence with a horizontal break almost at the same time is the best and cleanest, because let's say it was right here at this 382 level that this significant level had multiple touches, which there's been a couple here, but not as many up here. So, but for example's sake, 382, if we had a horizontal and diagonal significant break right here, well, you can put your close right before this line or right below the last Fibonacci down here, and it's way closer together than if you were to jump in a trade here. Well, you're now only playing this horizontal break, which for me that's just fine because I play horizontals mainly and pretty much only. But if you were wanting to play the retest, the throwback of this diagonal line, well, from here to down here is, you're talking about 23% to get back below this line. So just not as clean, but that's only if you were wanting to hold out till there was a retest of this diagonal line, which we almost got over here, but not quite. Another thing you can look at from here is fork breakouts. So, okay, it got rejected here, so I'll wait on the fork. So, okay, now you can draw a line over here, and boom, got the breakout here, and it's a lot tighter if you wait for a second diagonal break after you see that the horizontal got rejected on the first diagonal break, and boom. So this is a lot closer together and way cleaner. And honestly, guys, I was cautiously bullish here on the 1, 2, 3, 4th retest, really the 5th on this wick over here, 5th retest of this horizontal. I thought this could be the one that we break through, because the more that you test a level, the likelihood it's going to break. And so on this diagonal here, I loaded up my bags, but you know what? Right whenever it closed below this plane, and it also closed below this 0.5 fib level that has shown support and resistance there, after it broke over here, rejection there, and then rejection once it closed back below here, and then so there's been some significance on this level. So for me, the diagonal and a close below was good enough for me to just go ahead and exit the trade, which thankfully it worked out, because now I am loading up a little bit down here, just playing that there could be a bounce at this 236, and what could also be, and I've posted this on Twitter as well. I will just go ahead and get rid of these bad boys. If you can see this red line across, or this box, let's act as if it's a line, and then this line here, this could be an ascending triangle depending on how you look at it. So if you just use from this wick over, boom, 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 to here, and then that would give you, if it does pan out, this would give you a target approximately, depending on where it breaks out, but we're looking at about 54K. So if this turns out to be an ascending triangle, which I've already posted on my Twitter, I'm watching this. Yeah, 54K would be the target on that breakout above 44.5, which again, I said that could be the level that you play with a close below 44.5, or you wait a little bit more conservatively, get up to 45.5, and then you jump in. Okay, so that's the daily time frame. So now looking at the 4 hour, which I trade a lot, helps get you into a move a little bit sooner, but there still is the chop. You can see here, broke below, maybe double top here, and then it breaks back up. Now you're like, oh, okay, bulls are back in control, and then a swift move back down. So now it's a bigger double top, on the 8 hour, the daily time frame. You'll see here, boom, and then that was the big move. But yeah, back to the 4 hour. So you can see here, I've got the Fibonacci from this last low in this range on this impulse move down from the top to the top of this zone that we've been trading in since the beginning of the year. You can see that there has been a lot of significant touches off of these fibs to show that it's trading pretty cleanly within this range. There's still some chop in between, but still, it's still worth noting and watching because there has been significance on these levels, multiple touches. So right now, the 0.5 has been one that has shown a lot of significance. There's been a rejection here, and then there was a support touch here, rejection, lots of rejection here. So just showing you how strong it's been on this level. This is where I would already draw a horizontal plane just from here and here and here. But that has confluence with this 0.5 level. Definitely makes me watch it a lot closer. It looks like Bitcoin had a nice little fake out here after this 4-hour close, and now is wanting to pump back up. So that's the 4-hour look, guys. So a close above this 0.5 to me would offer an opportunity to play it back up to this level here. Of course, 40K is the logical area to have a close above to then play back up to this fib level. But, and you can see over here, there's been a little horizontal plane you could play off of. That would be 39.8. So, if you wanted to play it safe and wait till 40K, you could. But a close above here might be the best bet to jump into long. Not financial advice, just something I'm looking at personally. And so that would be a 3% trade up to the top there, and then you could even play it up 2 levels, because typically when you get a bounce down here at the Fibonacci, 236 is a good play. So that could be 7.9, call it 8% trade there. So that is looking promising but still, 4-hour just closed, so there's still a lot of time left on this. So this is definitely one to watch on the 4-hour. Zooming into the 1 hour, actually I already had that pulled up. So you can see on the 1 hour that this was clearly a tight range we've been trading in for the last day. And the moment that we closed below, we had a huge drop. But this hour is about to close back above this level. So that shows me, and looking at it right now, look at this volume coming in over the last, 10 plus candles, 20 plus candles. This is the strongest volume that's come in. So definitely worth noting this lower wick, this lower shadow, especially let's see where this hourly closes in 10 minutes. But also of note, this is the weekend, guys. So if you can see, you're going to see that the volume on the weekends just drops and allows for a lot more volatility, shakeouts. So it's just definitely something to watch out for on the weekends. But yeah, the 1 hour is just really wanted to show you. I already had it teed up to show why this drop had happened, because this was a significant level on the 1 hour that we had lost with a swing failure pattern up here. Really, we swung back above this level here, and then had somewhat of a tweezer top right at this. This is the super trend right here that it got caught right at, and also the EMA 34. And so right after we got a close and rejection there, we had to bounce off this level, but then a quick close right below, and that's what signaled this huge drop down that we just saw. And so you can see that there is some demand down here on this area. Couple of candle bodies close here, some wicks, and then another wick. So for now, on the low time frame, this is the area. If you're going to be trading this weekend, you might look to snag some here with a little stop below here. So yeah, if you could jump in on any kind of stupid shakeouts down here, this would be a decent little setup just to even just play back to the top of this range. Or if you wanted to play it up here, you could. But until we break above 39.7, and like I said, on the 4 hour, over here, you can see that this level is really the one that we want to close above on the 4 hour to signal a bigger move up on this Fibonacci. But on the 1 hour, just getting a close back above where we rejected up here would be a strong move for the bulls. And if we're going to look at the next NPOC, the naked point of control, the last level that was traded without any kind of retest in price, right after, there was this big drop here. Actually, we'll play it up here on the 1 hour. So that would be 40,800 that I could see that we could have a quick move up to and then get rejected and maybe close below. I mean, this is the weekend, so these kind of wicks can happen very, very easily. But definitely watch for, somewhere in this range. If we do get a close above, let's make it gold, because looking for that money. Well, that's not really gold, it's kind of yellow, but whatever, you know what I mean. So yeah, so if there is a close above here, then you could jump in the trade right there with a close below here and play it up to this bad boy. So it depends on the breakout, so where you jump in. But if you're getting it right above, then you could have your stop about 1%. So you're looking at 2 risk reward 2 to 1. So it's not too bad, just depending on how you trade. But that could be another setup right there, guys. So just wanted to go through the weekly, daily, 4 hour, and 1 hour for you to see what I'm looking at, and if there's anything else that you guys are interested in me charting or helping you with, please get on Twitter. That's where I'm at most of the time. I am on TradingView a lot, but mainly I'm posting my trade setups on Twitter. And then, anything you're interested in, just DM me or, tweet me, and I will get at you as soon as I can. I've got 3 kids, and so, got to work around their schedule and the fans and everything else I got going on, but definitely always looking to help you guys win however I can. That's what I'm about. That's what the cryptologist wants to do, is unlock the charts for you guys, give you the keys to the car to making you win and making more money. So thank you guys for watching. Again, subscribe, like if you haven't already, and God bless. Have a good weekend.